Hello, today I do not want to talk about the fact that tech companies kind of dominate the S&P 500. What I want to talk about is two things. Number one, that Tesla is going to go into the S&P 500. It's going to be a big name, anticipating it being kind of in the top 10 initially. I also want to talk about, what it takes to get into the S&P 500, given the fact that Tesla's been around for quite some time, very popular name, very high priced name. What has taken so long for it to get in there? Let's look at what it actually takes to get in. Now, of course, Tesla coming in, big pop on the open due to the announcement, up roughly kind of 10%, although it fell a little bit, you can see there. Also, we can see that if you look at over the last 5 years, the Tesla was kind of trading, in that 50, $60 range, give or take quite a bit, a little bit there for several years, and has really popped, given some earnings news from them, maybe in anticipation of it actually going into the S&P 500. Now, if that's the case, this price move is really driven maybe more by anticipation and less by fundamentals. Now, regardless, this is going to be a massive change for people either that are indexers or active managers. The shares are going to have to swap. So to buy shares to get into S&P 500 versus sell, this is going to be a massive trading day in terms of dollar volume out there. But again, what I really want to talk about is what does it take to get into the S&P 500 index? Now, some of these rules apply to their other indexes, but we'll just assume we're talking about the S&P 500 here. First off, it has to be a U.S. company. Now, that's not totally cut and dry, given that many companies are global, but they need to file 10K filings in the U.S. So, their fixed assets and revenues need to be primarily in the U.S., and there's some wiggle room there. Fixed assets take precedence over revenues, and they need to be, traded primarily on a U.S. stock exchange. Now they also need to be, common shares, and there's some other rules there. So, the kind of limited partnerships, some of these other things could not be included to be a specific type of share, primarily common stock, REITs, things of that nature. It also needs to have a large market capitalization. Now, right now they're saying it needs to be at least $8.2 billion. I really hate it when people talk about market capitalization ranges in these fixed numbers. As an asset manager, I really push teams to have a dynamic market cap range because the market ebbs and flows. We have recessions, we have expansions, and the market cap ebbs and flows. And you really want to think about capitalization from a dynamic standpoint. S&P 500 is clearly guilty of that here. If I were inside, I would encourage them to change that, and maybe they do. They just maybe publish this kind of hard number, but it really needs to be dynamic. But right now, 8.2 billion, that's the cutoff to go into the S&P 500. There are some liquidity rules. So if you look at some of their documents, it says it needs to be highly liquid. Well, what does that mean? Really, basically talking about the traded value to the float value, and that needs to be at least one. So it needs to have a full float worth of trades every year. Every 6 months, you want to see at least 250,000 shares traded hands, and the float cap there is 50%. So of course, float is, out of all the shares outstanding, which ones are really traded? I mean, if they're held privately by the company or some other place where they're never going to be traded, then we're not going to count those because they don't really trade, and that's not really fair. But there's these two criteria there in terms of liquidity and float. Finally, in terms of earnings, a company needs to have, if you look at over the past 4 quarters, the sum of those earnings needs to be positive. And if you look at the previous quarter, that needs to be positive. Now, if you look in the news, you'll see that people kind of talk about each of the 4 quarters having to be positive. It's really the sum of those 4 quarters that have to be positive, just to be clear on that. Now, if you want to see and read the full document, the multi-page document on the SP criteria, you can look at this. If you can follow this link here. So next, in the next week or so, let's talk about what this really means. What happens when a company gets added to S&P 500? What happens to its share prices? What happens to its future? Now, I want to point out that I previously made a video on Tesla, or not super positive on it from an investment standpoint. I like the company, would love to have a Tesla in my garage, but I think from an investment standpoint, it's not good. And this news leads me to believe that we're kind of at that peak Tesla price, or that the majority of the time in the future, the price will be lower than it is now. But again, we'll kind of cover that next time. Anyway, thanks so much for listening.